Hey everyone, and welcome. I'm absolutely thrilled you're joining us for this explainer today because we are breaking down a massive, massive story in the precision medicine space. We're looking at NeoGenomics, specifically their frankly transformational Q1 2026 earnings report. Now, if you've been following the oncology diagnostics market, you know it's a sector defined by rapid, almost dizzying innovation, but also really intense operational challenges. What we're seeing with NeoGenomics right now is a textbook example of a strategic turnaround actually taking flight. They are balancing cutting-edge clinical science with some serious financial discipline. We have a ton of fascinating data to cover, so let's just get right to it.
Okay, let's dive into this. Here is our quick roadmap for today. We'll be going through 1. A transformational first quarter, 2. Breaking down the financials, 3. The innovation growth engine, 4. Operating with new efficiency, and finally, 5. Raising the 2026 outlook. Let's get started.
Section 1. A transformational first quarter. Let's look at this strategic turnaround.
You know, when we analyze an earnings report, it's super easy to get lost in a sea of numbers, but numbers just echo strategic actions. To really set the tone here, CEO Tony Zook stated point blank, the first quarter of 2026 was a truly transformational one for NeoGenomics. Now that is a bold statement, but as focused learners, we need to see the hard evidence, right? We need to see if the data actually backs up this claim of transformation.
Well, here is that visual proof. NeoGenomics posted an 11% year-over-year jump in consolidated revenue, bringing the top line to a first-quarter record of $187 million. In the complex and highly regulated world of cancer diagnostics, sustaining double-digit growth at this scale is a massive achievement. This isn't just a slight beat. It is a clear indicator that their offerings are deeply, deeply resonating with oncologists, pathologists, and hospitals. This $187 million figure, that's the anchor of Tony Zook's statement.
Moving on to Section 2, breaking down the financials. Let's talk about operating leverage.
Okay, so top-line revenue is up 11%, right? But look a little further down the balance sheet here. Their GAAP net loss actually decreased by 34%, dropping from almost $26 million last year to just over $17 million this quarter. And honestly, the real standout for me, adjusted EBITDA. It's a key measure of core operating profitability, and it grew a massive 27% to $9 million. What this tells us is they aren't just buying growth by wildly outspending. They're growing revenues while simultaneously shrinking their losses.
And the underlying driver of that financial success is a true aha moment. It's not just that they're running more tests, though to be fair, clinical volume did climb 6%. It's actually the value of those tests. The average revenue per clinical test increased 8% to $495. Actually, if you strip out their recent Pathline acquisition, the price per test rose nearly 9% to $501. This upward trend in both volume and revenue per test shows incredibly strong execution and real pricing power in the market.
Section 3. The innovation growth engine. Let's look at the catalysts behind this growth. Now, to really understand their biggest catalyst, we kind of need to understand the science behind it. You've probably been hearing the term MRD a lot in oncology lately. Molecular Residual Disease, or MRD, is essentially like a high-tech radar system for the human body. After a patient undergoes cancer treatment, MRD testing looks for minuscule traces of circulating tumor DNA, or ctDNA, floating in the blood. It detects cancer at the molecular level way before it ever shows up on a traditional scan. This is exactly what NeoGenomics is targeting with their newly launched RaDaR ST assay.
And the sheer scale of the opportunity for this RaDaR ST assay is staggering. Management estimates that the MRD market represents a $20 billion total addressable opportunity. What's more, it's growing at 30% annually, and they believe it is currently less than 10% penetrated. So this isn't just a massive revenue driver for NeoGenomics, it represents a fundamental paradigm shift in how we catch and monitor cancer recurrence for thousands of patients. The clinical launch of RaDaR ST literally puts them at the absolute forefront of this movement.
But while MRD is the exciting new frontier, next-generation sequencing, or NGS, is the established powerhouse currently driving the business. NGS represents about 1/3 of NeoGenomics' total clinical revenue, yet it grew at an incredible 26% year-over-year. The wild part? It only makes up about 10% of their total clinical volume, which perfectly explains why their average revenue per test is climbing so nicely. These are highly complex, high-value, comprehensive genomic profiling panels.
Beyond RaDaR ST, they're also expanding their PanTracer portfolio. In Q1, they secured a favorable MolDX coverage decision, which basically means crucial Medicare reimbursement approval for PanTracer LBx, their blood-based genomic test for advanced solid tumors. They also launched PanTracer Pro to help clinicians navigate these increasingly complex testing workflows. These blood-based liquid biopsies perfectly complement their existing pan-tracer tissue offerings. It essentially ensures that community oncologists have a full suite of tools to make personalized treatment decisions, keeping that test volume super robust.
Section 4. Operating with new efficiency. Let's talk about operational discipline.
So internally, the discipline is pretty obvious. Operating expenses actually fell by 2% year over year, down to $99 million. Now, this was driven by the non-recurrence of some one-time items from last year, plus just really smart expense management. Furthermore, they maintained a very healthy cash position, ending the quarter with $146 million. This is absolutely crucial because it gives them the financial flexibility to continue funding the clinical rollout of RaDaR ST and their other innovations without being backed into a corner financially.
And the true inflection point of this turnaround is stark. Let's look back. In Q1 of 2025, they were facing deeper net losses and margin dilution. Fast forward to Q1 2026, and they've actually turned adjusted net income positive to the tune of $1.4 million. They're also aggressively implementing gross margin improvement initiatives, like increasing their lab automation. So they've shifted from purely burning cash for growth to proving that their operational model can actually generate positive adjusted earnings.
And finally, Section 5, raising the 2026 outlook, sustainable growth.
The most crucial takeaway here is that management's confidence in these sustainable growth drivers pushed them to officially raise their full-year guidance. They finished 2025 at $727 million. Their initial 2026 guidance midpoint was $797 million. Now, after this blockbuster quarter, they've revised that upward to a range of $797 to $803 million, sitting right at an $800 million midpoint. They are loudly signaling to the market that the momentum we saw in Q1, the NGS growth, the MRD launch, the pricing power, it's not a fluke, it's a trend. And they've got some major catalysts lined up to make sure they hit those targets. Specifically, at the upcoming ASCO annual meeting in Chicago, they are bringing serious scientific muscle, showcasing 8 scientific abstracts. They'll be highlighting new biomarkers to support biopharma partners who are advancing targeted therapies. But perhaps most interestingly, they're debuting a new low-sample input acute myeloid leukemia, or AML, MRD flow assay. This is designed to deliver way faster turnaround times and higher sensitivity in hematologic trials, even when sample availability is highly limited. It's just another great example of pushing the technological envelope to solve real-world clinical problems.
Which leaves us with this final thought. NeoGenomics has proven they can execute on their turnaround. They are balancing 11% top-line growth with shrinking losses and tight operational discipline. They've launched into a $20 billion MRD market. So the big question we have to ask ourselves as we look ahead is, with the raised financial outlook and a deep pipeline of advanced tests, how will NeoGenomics' upcoming data presentations at ASCO further disrupt the oncology diagnostics market? The next few quarters are going to be absolutely fascinating to watch as this innovation pipeline fully translates into long-term market outperformance. Thank you so much for joining me for this explainer, and keep learning.